Hello everyone, welcome to Grade B online learning platform. So this is part 2 of Accounting Standard 13 on investments. So in part 1 we had covered some concepts, so let us quickly revise them first and then we'll move on to the current slides. So we studied about the objective of Accounting Standard 13. That was we are going to see in this accounting standard the accounting for investments in the financial statements, and it has prescribed various disclosure requirements that we are going to see in this current slides. And then we got to know that investments are assets because they derive future benefits to the firm in which they are being held by earning income by way of dividends, interest, and rental. So there are three ways in which we can earn income by way of investments, and since they are held for capital appreciation, that is why it is said that they derive future benefits to the enterprise and other benefits to the investing enterprise. And now investments are done using shares, like purchasing of or investment in the shares, debentures, bonds, etc. So these are the examples of investments. And shares, they give us dividends on them. The debentures and bonds, they are interest bearing securities, so they provide interest on them. That may be annually or after a fixed period of time, say monthly or quarterly as well. And then rentals we have on investment in properties. So the applicability of accounting standard 13 on investments is on all type of entities, that is the corporate or the non-corporate and their various levels, and the SMCs and the non-SMCs. So there is no exemption or no partial exemption for any kind of SMC or level 2 or level 3 enterprises. It is applicable on every type of entity. Then we have the examples of investment. I told you the government bonds that we have, they are interest bearing securities. So it is a kind of investment. Then the debts or the debentures, the equity or the shares, they are also type of investments. And then we have the property. If you are buying any land or building and that is not used in the business activity, that means it is not being used as a warehouse or to store goods or for production purposes, then we can say that you have made investment, because only then you can rent out to someone else and get a fixed rental income on it. So then only it is known as an investment. Also, the assets held as stock in trade are not investments. Why? Because inventory, it is related to the business and it is for the ordinary course of business. It is not any investment apart from the business. So here in this accounting standard 13, every investment that is not used for in the business but apart from the business is known as an investment. So since inventory is a part of business and it is a stock in trade, therefore it is not an investment. And any any accounting treatment for inventories is discussed in accounting standard 2. Then we have the scope of accounting standard 13 investments. This didn't deal with any recognition of interest, dividend, and rentals. So any income that is derived from the investments, right? That is the interest, dividends, and rentals. They are being dealt in Accounting Standard 9 on revenue recognition. So investments, we deal with Accounting Standard 13, but their income, that is interest, dividend, and rentals, are being dealt in Accounting Standard 9. Operating of finance lease is also not a part of Accounting Standard 13. Investment of retirement benefit plans and insurance, life insurance, any LIC or retirement benefit plans in which you invest is also not a part of Accounting Standard 13. Then the mutual funds and the venture capital funds. So I told you, as this building and the stock and trade is a part of business for any ordinary wholesaler or retailer, same way, the main business of mutual funds and venture capital funds is to acquire shares and buy and sell them, or trade in shares and debentures. So these are investments. The shares and debentures are investments for normal people, ordinary people. But for mutual funds and venture capital funds, it is like a stock and trade for them. And so therefore they are not dealt with. Any mutual funds and venture capital fund accounts are not dealt with Accounting Standard 13. Then we had some important definitions that were: a current investment is investment that is by its nature readily realizable, First point is readily realizable, and if you're not holding it for more than 1 year. So there are two things. Then we have a long-term investment is investment other than a current investment. So anything which is not a current investment is a long-term investment. Also, we have seen that a current investment shall be held from the date on which such investment is made to 1 year from that. Okay. So whenever we are recording it in the books of accounts from that date, we see it that it is not being held for more than 1 year from that date. Now, an investment property, it was just the example that I gave you over here. This investment property, which is not held for the business purpose. ठीक है? So it is an investment in land or building that are not intended to be acquired or occupied substantially for use by in operations of an investing enterprise. And fair value is amount for which an asset could be exchanged between knowledgeable willing buyer and knowledgeable willing seller in arm's length transaction. Then we had classification of investment. There are of two types. Investments can be current and long term. Current investments are current assets because they are held for not more than 1 year, and long term are non-current assets since they are held for more than 1 year. Okay. Next we have cost of investments. So there are some monetary cost, that means the cash consideration, that is the brokerage duties and fees. So whenever we give funds or fees to mutual funds to keep a portfolio of investments for us, so that fees is the cost of investment because we are acquiring those investments through mutual fund by paying them fees and duties can be any taxes on investments, and the brokerages, whenever you invest yourself through invest in investments or like buying and selling of securities through any broker in between, broker platform say share khan, so at that time you pay brokerage on buying and selling of every security, so that is also a cost of investment. Then there are other non-cash considerations. Say if you are acquiring partly or wholly any security by issuing or issuing shares or other security, so the acquisition cost will be the fair value of the securities issued. Okay. So if you are like giving or exchanging any investment with another share or other security, so at that time the security that you have issued to that person will be the cost of that investment that you have acquired. And also, if you are exchanging any investment partly or wholly for another asset, here the asset stands for any fixed asset. Okay. Here there was shares or any other security, say debentures or bonds, but here it is asset. So at that time, the cost of that investment would be with reference to fair value of the asset given up. So that fixed asset that you have given up, if it stands in the books of account for say 1 lakh and you have acquired any security in exchange of that, so the value of that newly acquired investment would be 1 lakh rupees. Or if it is not evident, like the cost of that asset given up is not evident, you can also consider the fair value of the investment acquired. Okay. Next, right shares. These are the rights that are provided to the existing shareholders of any company, and they are given the right of acquiring the securities at a concessional rate. Say in the market, if the rate is 200 for per share for any security, say Infosys share, and you are being provided them at rupees 150. So you are being provided at a concessional rate and before the public offer is made. So in that case, if the shares are of right shares are offered to you and you are subscribing them, then the cost of such right share is then added to carrying amount of the original holding. Okay. And interest, dividend and other receivables, though they are the income of investments, they are the return on the investment, so they cannot be cost of investment, but they are the income. But in some cases, though the usual or the general treatment is to carry them into the profit and loss account to treat them as income, but sometimes what happens, that dividends, as we have seen in the last lecture, that in certain conditions such inflows signify recovery of cost and doesn't form part of income. So in which condition dividends are treated as recovery of cost? We have seen that any pre-acquisition dividend that we receive for which we were not holding the shares, at that time we say that it will reduce the cost of investment and will be credited to the investment account. And the post-acquisition period dividend, that will be taken to the profit and loss account from the investment. Now here, when we had the pre-acquisition dividend, it was credited to the investment account, okay, because it was pre-acquisition, so it reduced the cost of the investment. And here the post-acquisition is what we have earned and is treated as our income. So that was all what we learned in the last lecture. We are going to start afresh with the current lecture. So this line we have already read before. It is of significance for this slide as well. However, in some circumstances, such inflows represent a recovery of cost and do not form part of income. So now in which condition interest is treated as recovery of cost? Earlier we have seen about dividends, okay? So interest is also again income from investment, but in which condition interest also is called treated as the recovery of cost. Now, for example, when unpaid interest has accrued before the acquisition of an interest-bearing investment and is therefore included in the price paid for investment, the subsequent receipt of interest is allocated between pre-acquisition and post-acquisition periods. The pre-acquisition portion is deducted from the cost. Same thing, guys, same thing. That means interest also is divided into pre-acquisition and post-acquisition period. All the pre-acquisition receipts will be deducted from the cost, and the post-acquisition interest will be taken to the profit and loss account. Okay, for every interest-bearing investment, that will be debentures and the bonds. Now, when dividends on equity are declared from pre-acquisition profits, a similar treatment may apply. So we have seen the treatment of the dividends on equity, and the same way will be the treatment of interest as well. So both interest and dividends are divided into two parts for the purposes of their treatment, that is the post and the pre-acquisition. So there are two cases for the right shares. Now first of all, we have already seen what right shares are. So in case the right shares offered are subsequently subscribed for, the cost is then added to the carrying amount of original holding. This is what we have learned till now. But in case the rights aren't subscribed for, however, are sold, sale proceeds from the sale of such rights are transferred to the profit and loss account. But where an investment is acquired, it might be prudent to apply the proceeds from the sale of rights to reduce the amount of the investment to the market value. See, right shares, I told you that they are the rights that are given to the existing shareholders. Say if I have the 500 shares of Infosys right now, so I am an existing shareholders. Now if there are new shares that the company of Infosys will allot, they will ask me first, they will offer me that we are again offering 1000 shares to you. Do you want to subscribe for them, or you do not want to subscribe for them? So I will have then two options. First of all, I can issue. If the right issue option is exercised, that means if I exercise my right, at that time what I will do is the cash price paid to acquire the shares shall be added to the carrying amount या फिर book value of earlier investments. So whatever earlier I paid to buy those shares, I paid 500 multiplied by 250 per share, that was 1,25,000. So whatever cash price now I will pay to acquire those shares shall be added to 1,25,000 amount. But the second option that I have is at whatever concessional rates they are providing me the right shares, I can sell that right to the other person. I may not subscribe for those shares myself, but I may ask another person to subscribe them, because in the market they will be subscribe for 250 per share, say for example, but they were given to me at concessional rate, say 200 per share. So any person would like to buy those shares from me instead of buying from the market, because that person will also have to pay 50 rupees less per share. So at that time, if I not exercise but sell my right to any other person, so the sales proceed shall not be deducted from the carrying amount of the investments. So whatever amount that I will receive from those सेल प्रोसीड्स से क्या होगा कि अगर मैं अपने किसी थर्ड पर्सन को राइट देती हूँ, तो आई विल नॉट गिव हिम फॉर that concessional rate that the company has provided me, क्योंकि मुझे फिर क्या profit होगा? If in the market that same share will be subscribed for say 250 rupees, but the company is offering that to me for 200, तो मैं जिस third person को वो दूंगी वो 210 पर दूंगी, because 10 rupees per share का profit मैं रखूंगी. Only then I will sell my right to any other person to keep a profit of 10 rupees per share as an example. तो अब मैं क्या करूंगी, 210 पे उसको उससे मेरे को जो भी पैसा रिसीव होगा दैट विल बी माई सेल्स प्रोसीड and that shall not be deducted from carrying amount of investment. See, as in the case of dividends we saw कि हमारी cost of investments reduce हो जाती है in case of pre-acquisition dividends, but here जो मुझे right shares sale करके जो उनसे sale proceeds मिलेगी, I will not deduct it from carrying amount. Instead, that sale proceeds will be taken to my profit and loss account. So that is written over here. In case you sell your right to any third person, you take it to the profit and loss account. But in case if you are exercising your right issue option, then you add that cost to the existing investment value. Then the carrying amount of investments. For current investments we have, the carrying amount for current investments is the lower of cost and the fair value. What is cost? We know the cost is what we acquired the asset or the investment for, and fair value is the current market price. So उनका जो भी lower होगा, at that amount we will value the current investments, and that is known as the carrying amount. Carrying amount is nothing but lower of cost and the fair value. The valuation of current investments at lower of cost and fair value provides a prudent method of determining the carrying amount to be stated in the balance sheet. Now, what is a prudent method? What is the meaning of this? See, in accounts we have various concepts. The one of the famous concept on which the accounting is based is known as the concept of prudence. So here it is written a prudent method. Prudent method means do not overvalue any profits but provide for all the losses. It means that अगर हमने कोई भी इन्वेस्टमेंट से 1000 रुपीज़ की खरीदी थी, बट आज उस इन्वेस्टमेंट की फेयर वैल्यू 1000 की खरीदी थी, दैट वाज अ कॉस्ट, बट नाउ द फेयर वैल्यू इज 950 रुपीज़. हमारी मार्केट वैल्यू उसकी कम हो गई है उस इन्वेस्टमेंट की बाय 50 रुपीज़. तो प्रूडेंट मेथड इज कि आपको अपने बैलेंस शीट में उसको एज अ प्रॉफिट नहीं दिखाना, मतलब आपको हायर कॉस्ट पे नहीं रखना, लोअर पे रखना है, ठीक है. प्रोवाइड फॉर ऑल द लॉसेस. अगर आपको 50 रुपीज़ का आज लॉस है उसकी मार्केट वैल्यू पे, तो यू शुड प्रोवाइड फॉर दैट, मतलब यू शुड शो दैट इन योर बैलेंस शीट. आपकी अंडरस्टेट कर सकते हो एक बार को, बट यू कैन नॉट ओवरस्टेट प्रॉफिट्स. Provide for all the losses. So this is the way we say that it is a prudent method of determining the carrying amount to be stated in the balance sheet. Now for current investments, any reduction to fair value and any reversals of such reductions are included in profit and loss statement. Now say in this example only, when the cost was 1000 of any investment and the fair value is now 950. So now you will have to reduce your investment in the balance sheet by 50 rupees. So you will have to now write it as 950. So जो 50 का हमको loss हुआ है, that is reduction to fair value, and any reversals, not reversals, but that reduction shall be included in the profit and loss statement. तो आपको वो loss on investment आपको अपना profit and loss statement में लेकर जाना है. और any reversal means अब मान लीजिए आपकी fair value again it reaches 1000, कॉस्ट भी 1000 थी, फेयर वैल्यू भी 1000 हो गई, तो आपको लोअर ऑफ द टू दैट इज 1000 ओनली, पहले 950 पे लेकर आए थे, बट नाउ इट हैज़ अगेन रीच्ड 1000. सो जो भी आपका रिवर्सल होगा, that reduction or any reversal will again be included in the profit and loss account. So any appreciation in the value of investment will also be taken in profit and loss account for current investments. Okay. For long-term investments you have, they are usually carried at cost. So here we followed the concept of lower of cost and fair value, but here it is carried at cost. However, when there is a decline other than temporary in the value of long-term investments, the carrying amount is reduced to recognize the decline. Okay. तो यहाँ पे यूजुअली क्या होता है, अगर कोई ऐसा डिक्लाइन है जो टेम्पररी नहीं है, Say if you are holding an investment for 5 years and in the first following 1 year that decline in the value was permanent, it was not fluctuating, so we say that it was not temporary decline ही था, like not like a zigzag line, but it was a temporary decline, not a temporary decline, it was a sharp decline for say 1 year, तो हम कहते हैं उसे permanent. At that time आपको recognize करना पड़ेगा उस decline को और अपने cost से भी नीचे उस decline की value को अपने books of accounts में record करना पड़ेगा. And when there is a decline other than temporary in carrying amount of long-term investment, resultant reduction is charged to profit and loss statement. So just like the current investments, any reduction in it was carried to the profit and loss account. Same way, any decline that is not temporary will be taken to profit and loss statement, and the reduction in carrying amount is reversed when there is rise in value of investments or if the reasons for reduction no longer exist. Say अब एक particular year में recession आ जाता है which results in a permanent decline of the long-term investment, and after recovery, say after 2 years, the investment in a particular share it starts to be stable and grow. हमारा decline खत्म हो जाता है and there are no other reasons for its reduction. So again we have to restate that investment जिस value पे वो पहले थी. We again will have to carry it at cost of whichever the new value is. तो again उसको भी हम क्या करेंगे, reversal कर देंगे just like the current investments. Next we have the disposal of investments. Now on disposal of an investments, that means when you are disposing of your current investments or non-current investments, कोई भी आपका difference होगा carrying amount में and disposal proceeds में, net of expenses is recognized in P&L. So say in both these cases we have seen that we need to carry them at lower of cost and fair value, and here if there is any decline that is of permanent nature, the cost will be reduced and we need to recognize the decline. So अगर कोई भी difference होता है हमारे carrying amount में, जिस amount में हम carry कर रहे हैं उस investment को and disposal proceeds में, तो we will generally recognize a profit and loss that will be net of expenses, and that profit and loss on buying and selling of that investment, on disposing of that investment will be recognized in the profit and loss account. Then we have on disposing of a part of the holding of an individual investment. Now अगर आप पूरा part of investment सोल्ड नहीं कर रहे हो, मतलब एक wholly investment you are not selling it but only a part of it. At that time the carrying amount to be allocated to that part is to be determined on basis of average carrying amount of total holding of the investment. Say average cost with an example. On 1st of May 2019, you bought 1000 shares at 470, and then on 1st of July, you bought again 800 shares at 450. So on 2 days, on 2 dates you have purchased shares 1800, and then you sold 500 shares at 520 on 1st of September. So at that case, on first 5 purchase cost was this much, that was 1000 into 470, and the quantity was 1000. And on first 7 the purchase cost was 800 into 450, that was 360, and the quantity was 800. Now we have to take the total of both sides, that is the total amount of investment divided by the quantity, and we get the average cost as 461 rupees approximately. So then you have sold 500 shares at this much. So that is what they are saying कि अगर आपने अलग अलग dates पे purchase किया है and you are selling off a part of investment 500, the total investment was of 1800 shares, but you are selling off 500. So at that time you need to determine the cost on basis of average carrying amount. Okay. Then we have the reclassification of investment. So sometimes your current investment becomes your long-term investment and the long-term investment becomes your current investment. So where the long-term investments are classified as current, transfers are made at lower of cost and carrying amount at the date of transfer. तो जब भी हम long term से current investment की तरफ जाते हैं तो we need to value investment as per lower of the cost of the investment and the carrying amount at the date of transfer. ठीक है? And जब भी हम short term, it is where investments are reclassified from current to long term. Transfers are made at lower of cost and fair value at the date of transfer. Because जब हम करंट से लॉन्ग टर्म में जाते हैं तो करंट के लिए हम हमेशा क्या देखते थे, लोअर ऑफ कॉस्ट एंड फेयर वैल्यू. तो हियर ऑल्सो फ्रॉम करंट टू लॉन्ग टर्म at that time we will see the transfers are made at lower of cost and fair value only, right? Here it is written from long term to short term at lower of cost and carrying amount, from short term to long term lower of cost and fair value of the date of transfer. Now the disclosures that you need to make. The following disclosures in financial statements in relation to investments are appropriate. The accounting policies for the determination of carrying amount of investments. So the accounting policies that you have used, that means the accounting policy of prudence that you have followed for valuing the current investments, any reversals in them or their fair values and the cost, as well as for the long-term investments. Then the amount included in profit and loss statement for interest, dividend and rentals on investment showing separately such income from long-term and current investments. So whatever income is derived from the long-term and current investments, they both need to be shown separately. Okay. Then the gross income should be stated. The amount of income tax deducted at source being included under the advance taxes paid. So whatever income tax that has been deducted at source, that is known as the TDS. So which is included in the advance taxes paid, you need to show that. On what items? The interest, dividend and rentals. Then profit and loss on disposal of current investment and changes in the carrying amount of such investments. So we have already seen that while disposing the current investments, there is a certain profit and loss which goes to the profit and loss account only. So whatever profit and losses are associated with that, you need to tell us that. ठीक है? These are the amounts that will be included in profit and loss statement. Then the profits and losses on disposal of long-term investments and their changes. So here it was written for current investments and here is for long-term investments. Significant restrictions on right of ownership, realizability of investments or the remittance of income and proceeds of disposal. So sometimes the company can have significant restrictions on the right of ownership and their realizability of investments while they acquire them. So if there are certain kinds of significant restrictions, then you need to mention and disclose them. The aggregate amount of quoted and unquoted investments, giving the aggregate market value of quoted investments. So the amount of quoted and unquoted investments, that will be giving the aggregate market value of quoted investments, that you need to mention, and other disclosures as specifically required by relevant statute governing the enterprise. So if there are any other disclosures that your company is attracting by the relevant statute governing the enterprise, that you need to mention. Now there are two important cases. First one was the investment properties, that was the land or building in and that you are not using for your own normal business or the ordinary business, but for the purposes of rentals. So an enterprise holding investment property should account for them as long-term investment. So here it is written that anything that you acquire as land and property is your long-term investment. It is not your current investment. And then we have the bonus shares. So sometimes what happens, if you are any existing shareholder of any company and you have say you have 200 shares of that company and there is a bonus share allotment for that company. Okay, sometimes the company, they do not give dividends, but they release the bonus shares. So they will give you bonus shares in a particular percentage which they provide for, say 1:1. So for every 1 share you have, you will get a 1 bonus share. Say for every 200 shares that you have, you will get 200 more shares as bonus. Okay. So when we get bonus equity shares, cost of acquisition will be 0. Why cost of acquisition will be 0? Because these are the bonus shares that you get. For bonus, you do not have to pay any amount. You get them for free. So the cost of acquisition will be 0. but quantity of the number of shares will be increased. But earlier, since you had 200 shares that you purchased for some amount, but now the amount will not increase, but the quantity will increase. So when we sell the bonus shares, whatever profit we realize, the sale value is given to us. Okay, sale value will be given to us, but the cost, how will we determine the cost? Because when we bought the bonus shares, we didn't pay any money for its acquisition. We were given them by the company. So the average cost that we took out in this slide, this method is used. Here just the quantity will be increased and the amount that will come as average cost will be reduced from what this has come over here. So that's how we take out the cost of bonus shares, and then sale value will be given to us, and whatever difference will be the profit on the bonus shares. So that's all for Accounting Standard 13. Please do revise all these slides. These are very important, and I have wholly covered the Accounting Standard 13. And these are the courses, guys, that are on our website, that is www.crackgradeb.com. These are the star performers of our academy, and thank you so very much and happy learning.